Hello, everyone. Welcome for another Friday Fratarcangeli market update. On the heels going into the July 4th holiday week next week, we have a lot going on. I'm going to start with earnings and the markets in general. We've had a pretty volatile last 2 weeks since we last met, with the semiconductor, memory space, and just tech in general leading the charge on the way down about 3%. And then we saw a reversal on the earnings from Micron, kick the market back up. And here we sit on Friday morning with the market pulling back again, driven by tech again. I can tell you that on the ebb and flow of the markets moving higher, breaking new highs, it's expected that we're going to retrench. Sometimes the market's just looking for a reason, and I think we're getting prepared for our pullback that is inevitable and healthy. We have the volatility index spiking, which is the fear index, which is up about 13% in the last 2 days. I think that's a sign that the market's got some kinks in the armor, and we're going to expect some downside that we see as opportunity. So we're going to be watching for this very closely. We have a number of things that are going on simultaneously. We have oil down to pre-event Iran situation pricing, down below $70 a barrel. It's amazing. We have interest rates starting to slide down as well. And we're also looking at a dollar that's been on the run and strong. And that can be looked at a couple different ways. It could be somewhat of an impact to exports, but we also have the fact that we are becoming more self-reliant here in the United States. Onshoring, as we refer to it as, but I'd say a strong dollar overall is positive. We also have some data points that we're watching closely, with CPI numbers coming in on recent readings at 4.2%. But then when we take out energy, we're looking at 2.9%, which is right in line with the Fed's guidance to make sure we have inflation contained. And let's not forget, we had oil prices rising above 100, all the way as high as 126 per barrel on the spot. And here we are today below $70 a barrel. So the months of May and April and March, and then of course the downdraft that we're feeling now, maybe this is as we like to refer to it, as transitory. Maybe it's something that we're going to get through. And if that's the case and oil stays lower, that can just be something that's in the rearview mirror that won't have a large impact on us. We also saw the GDP numbers come in on the revise for Q1 from 1.6% on the first reading to 2.1%. So that's a nice move up. We're calling for GDP numbers that'll be announced in the end of July for 1.1% GDP growth. And that's something that we see some higher numbers based on the lower oil prices and more productivity that we see blow through that 1.1 number. That could be a very positive reading along the lines of inflationary pressures being contained. That could be a nice reading that will allow the Fed to stay course with either leaving rates alone or possibly even lowering interest rates like we saw as the prospects earlier this year. So we're watching these next phase impact of oil prices coming down and the inflationary pressures that we felt due to higher gas prices at the pump that we all felt, and all the other ancillary impact that we have now that oil prices are down. And we'll talk more about the Iran conflict and what's happening there here next, with the geopolitical side of things that we're still watching very closely. Every day there's a new headline that we're watching to see how this whole memorandum of understanding is going to play out. That was, of course, signed in the last week or two by our president and as well as Iran. It's a process that's going to take time, but we're seeing some very strong indications that the worst is certainly behind us, and maybe the light out in front is the light we've been looking for some broader relief and really a reorganization of how oil is distributed around the country. Let's think about this. Iran would be selling on the open market in US dollars. China would buy on the open market with US dollars. Russia is selling oil with sanctions having been lifted in US dollars. The waterway of Hormuz, would be considered international waterways, not sovereign to the Iran control. If this is successful, how oil is rewired around the world will be something that is unique and something we haven't seen in over 50 years, certainly my lifetime. Additionally, badly needed US dollars will be exported around the world, and while the US has become both the largest producer and exporter of oil along the way. These are very strong key ingredients to the strength that we are taking from this conflict as we look at the next stage and how this plays out. Overall, I see this as being not done, not complete, not completely on the other side. We hear it every day, but certainly well further ahead than what the pundits and certainly the media has been predicting over the last several months. I know we get lost in the news and the noise, and sometimes we have to stay calm, stay vigilant, and understand what the objectives are. I believe, listen, it can change on a whim, but I believe we're in for a mild but somewhat of a pullback in the market, which I believe is healthy. And I believe the old ingredient of dollar cost averaging, continuing to stay the course, understanding what your long-term goals are, making sure you have the liquidity necessary to make it through, and also have the discretionary assets to buy on the dip and continue to dollar cost average. I believe better days to come. The data we'll be seeing in Q2 on the heels of the lower oil prices and getting prepared for Q2 earnings, which I think will be surprised on the upside again, like we were last Q1. And I also believe we have this World Cup going on across North America. And we keep hearing in the news out there and how folks traveling the world, coming to the United States, are so impressed by how we live and how we have access and how abundance and how the quality of life is being looked at a little bit differently. They haven't been here since 1994 to see what we've done here in the United States. I'm so proud to be a part of this country as we enter into the 250th year of our country. And the next phase, I think, is the best yet to come. Expect volatility as an opportunity and know that Fratarcangeli Wealth Management has all hands on deck, has a plan in place that we'll be implementing to focus on the ultimate objectives of growing, protecting, and making sure that we are positioned accordingly to your vision. That's become our mission. I'll see you soon. Happy 4th of July.